Good afternoon and welcome to the weekly roundup for the week ending Friday the 27th of November. We hope that you're enjoying these weekly reports, and don't forget to subscribe to receive free regular stock market content. Also, if you've got any questions, pop them in the comments box below. And finally, we'd like to invite you to follow our free sector reports on banking stocks, tech stocks, IPOs using the link in the descriptions below. This week's really been a week of two halves. We had vaccine optimism drive stocks higher at the beginning of the week, and this was after AstraZeneca announced that their COVID vaccine developed in conjunction with Oxford University was found to be 70% effective. Now, this is slightly less effective than Moderna and Pfizer, which reported 90% effectiveness earlier in the month. However, the AstraZeneca vaccine is cheaper and also can be stored at room temperature, making it significantly easier to distribute. So this was some good news. Now, adding to the buoyant mood at the start of the week was signs that the transition to a Joe Biden administration would be going smoothly after President Trump hinted towards cooperation. That's also given stocks a bit of a boost. However, towards the end of the week, things have been a little bit quieter. Not only is it Thanksgiving holiday, or was it on Thursday, and also it's only a half day for US markets today, so volumes are particularly low, but also concerns are growing over the soundness of the AstraZeneca vaccine trial, and concerns are that this could actually just see the regulators taking longer to actually get it approved. And that's dragging on stocks. So actually at the end of the week, the FTSE is looking to end the week pretty much flat. The DAX is looking to end the week around 1.4% higher. Across the month of November, though, these indices have had phenomenal growth. The FTSE's rallied over 13%, whereas the DAX has rallied over 15%. Now, we've seen that the FTSE just slightly lags behind the DAX, for example, and the reason for that is also the strength of the pound. The pound has rallied over 3% across the month of November against the US dollar. This week again it has pushed higher against the US dollar, only around 0.7%, but still gain is a gain, and it hit a high of 134. Now basically the pound is being supported still by optimism surrounding a Brexit trade deal, even though headlines haven't necessarily been that favourable, particularly towards the end of the week. So there is still no deal on the table, but there is this optimism surrounding the pound that a bare bones deal at least will get achieved. And with the transition period due to end in just 5 weeks, time is really running out there. As far as commodities are concerned, we saw gold sell off sharply at the beginning of the week. And it's just hovering now around $1,800 per ounce. And meanwhile, oil has actually had a really surprising week. It surged on the vaccine news, hitting an 8-month high on Wednesday. Now, it has since eased back slightly, but basically it's vaccine optimism and also chatter that the OPEC Plus group may actually continue with their output cuts. Now, the output cuts, there had been rumours that the output cuts would be at least sort of reined in January, and now suggestions are, due to the resurgence of COVID and more lockdowns across Europe and potentially the US in the coming months, that they will keep those production cuts in place. As far as single stocks are concerned, we've had some big movers. There's no surprise that airlines, travel and tourism stock has been benefited greatly from the vaccine news. But also we had the British government announce earlier this week that it would reduce quarantine or travel quarantine restrictions with the introduction of a simple test. So rather than the 2 weeks which they are at the moment for some countries at least, that could be reduced to 1 week and some COVID testing instead. That's boosted travel stocks, as I said. I mean, AIG, British Airways, they've rallied 67% so far this month. They've had a cracking month. Also, we've got IGH, International Continental Hotels. They've had a phenomenal week as well. They're up over 5% on the week on the back of that news. On the downside, Virgin Money have had a bad week. They're down around 11% on the week after reporting a 77% fall in annual profits to 124 million. Now this is on the back of a 501 million pound impairment charge as they prepare themselves for a lot of bad loans as businesses and individuals struggle financially. Finally, pub groups have been very much in focus this week. We've had the government announce the tier categories for different parts of the country and what those restrictions will mean when we come out of national lockdown next week. Now around 20 million people will remain in category 3, so that's the toughest restrictions for COVID and lockdown measures. Now obviously this means that pubs will continue to have an extremely difficult run up to Christmas and beyond. We've seen job cuts from the big pub groups such as Mitchell and Butler, and also Fuller, Smith and Turner have also announced job cuts. The latter's down around 4% on the week. Thanks very much for joining. As I said, please don't forget to subscribe. If you have any questions, pop them in the box below, and have a lovely weekend.